I did something that would make most financial advisors scream in horror. I took $1,000 of my hard-earned cash, linked it to a cutting-edge autonomous AI agent, and gave it full permission to buy, sell, and trade without my approval. In the world of finance, emotions are the ultimate portfolio killer. We panic sell when the market drops 5%, and we buy at the top because of FOMO. But an AI has no heart, no fear, and no greed. It only sees data. As I clicked the authorize button on day one, my stomach did a flip. I was essentially handing the keys to my financial future to a line of code. I set the parameters to aggressive growth and watched the first $1,000 vanish into a series of micro trades within seconds. This was not just about a 30-day experiment, it was a test to see if human intuition is officially obsolete in 2026. If a machine could outperform a decade of my own trading experience, the world as we know it has changed forever. The AI started by scanning over 1 million data points across global markets, crypto, and commodity futures. While I was making coffee, it had already executed 12 trades, capturing tiny price inefficiencies that no human eye could ever detect. I promised myself I would not interfere, no matter how volatile things got. This was the start of the most terrifying, yet potentially lucrative, month of my life. Most people think investing is about picking winners, but the AI showed me it is actually about managing math. By the end of the first 4 hours, the bot had already made $42 in pure profit from arbitrage. It was small, but it was proof of concept. The machine was working while I was just standing there, breathing. It was the first time in my life I felt like the passenger in my own bank account. I was no longer the pilot, I was just the observer of a digital brain that was smarter, faster, and colder than I could ever hope to be. The transition from human control to algorithmic dominance had begun, and there was no turning back once that first trade hit the ledger. By day 3, I was ready to pull the plug. The AI had immediately lost $150 on a high-leverage short position that went sideways due to a sudden news spike. My human instinct was screaming at me to save the remaining $850. This is exactly where 99% of retail investors fail. We let a 15% drawdown dictate our long-term strategy. I sat at my desk, staring at the screen as red candles flickered, watching the AI continue to execute trades with cold, calculated precision. It was not panicking, it was rebalancing. The algorithm was actually buying into the dip, predicting a mean reversion that I could not see on the charts. It was fascinating and horrifying at the same time. While a human trader would be sweating and checking their phone every 2 minutes, the AI was operating with a 0% stress level. It moved $300 into a niche high-tech sector and hedged the rest against gold. By the end of the first week, the loss had been erased, and I was back at $1,050. It was a 5% gain, which is decent for a year in a savings account, but the AI was just getting warmed up. I realized then that the biggest obstacle to my wealth was not the market, it was my own urge to control the outcome. The AI was looking at a 30-day horizon, while I was looking at a 30-minute chart. This psychological gap is why the rich get richer. They have systems that do not feel pain. My bot was essentially a sociopath when it came to money. It did not care about the $150 loss. It only cared about the statistical probability of the next move. This part of the journey taught me that to win big, you have to be willing to see red without closing your eyes. If I had intervened on day 3, I would have locked in a loss. By doing nothing, I allowed the math to work its magic. It was a lesson in discipline that no textbook could ever teach as effectively as watching your own balance drop in real time. The real magic happened during the second week while I was fast asleep. Because the AI does not need rest, it was exploiting high volatility moves in the Asian and European markets. I woke up on day 14 to see my balance had spiked to $1,800. I checked the trade logs and saw that the bot had caught a massive 40% swing in a mid-cap energy stock at 3 in the morning. A human would have missed the entry point by seconds, but the AI entered and exited the position with surgical timing. It was not just trading, it was using sentiment analysis to read social media trends and news wires faster than any journalist. It detected a supply chain disruption in real time and positioned my money to profit from the chaos before the public even knew what was happening. This is the unfair advantage of the 2026 financial landscape. Information is the new gold, and speed is the only currency that matters. My initial $1,000 was now working harder than I ever could at a 9-to-5 job. The bot was compounding the gains, reinvesting every single dollar of profit back into high-probability setups. I started to wonder if I would ever manually place a trade again. The eye was scanning the Nikkei, the FTSE, and the Nasdaq simultaneously. It was playing a global game of chess while I was dreaming. Every morning felt like Christmas morning, checking the app to see how much overtime my digital employee had put in. It became clear that the 24/7 nature of modern markets makes human trading almost obsolete. We need sleep, the algorithm needs data, we have bias, the algorithm has backtests. On day 16, it executed a complex triple swap involving 3 different currencies and a commodity, netting a $200 profit in less than 4 seconds. I could not even explain the trade if I tried, but the results were sitting right there in my balance. I was officially a passenger on a rocket ship fueled by pure logic. As we crossed the 20-day mark, my balance hit $2,200. I had more than doubled my money in less than 3 weeks without lifting a finger. But this success brought up a serious question. If everyone uses this technology, does the market stop working? We are entering an era where algorithms are fighting algorithms. If my eye is faster than your eye, I win. If yours is smarter, you win. The little guy who is still picking stocks based on gut feeling is essentially bringing a knife to a laser gunfight. I watched as the BUT navigated a sudden 2% market flash crash on day 22. While the news was reporting on investor panic, my BUT was shorting the index and making $100 on the way down. It was a cold reminder that the market is a zero-sum game. For me to make this $2,500 profit, someone else had to be on the losing side of those trades, likely a human who panicked and sold. This is the brutal reality of the new economy. You are either using the tools of the future, or you are being liquidated by them. My BUT did not care about the ethics, it only cared about the 10% daily growth target I had authorized at the start of the month. It raised questions about the future of the middle class and the traditional buy and hold strategy. If machines can extract value from the market with this much efficiency, does the average person stand a chance? I felt a sense of guilt, but also a sense of necessity. If I do not use these tools, someone else will use them against me. The stock market has stopped being a reflection of company value and has become a high-frequency battlefield. My $1,000 was a small soldier in a very large, very invisible war. The 2026 investor does not need to know how to read a balance sheet, they need to know how to select the right algorithm. It is a shift from financial literacy to technological literacy. The last 72 hours were a whirlwind of activity I had identified as super trend in decentralized computing power. It moved nearly 80% of the portfolio into a series of aggressive swing trades. My heart was in my throat, we were up significantly, and one bad move could wipe out the entire month as progress. But the IS risk management was flawless, it moved stop losses into profit territory every few minutes. By the morning of day 30, the balance screen flashed a bright, neon green number, $3,500. That is a total profit of $2,500 on a $1,000 start. That is a 250% return in a single month. To put that in perspective, the S&P 500 usually takes 25 years to deliver that kind of return. I sat back in my chair, looking at the withdraw button, feeling a strange mix of euphoria and obsolescence. I did not do the work, the code did. I did not find the gems, the data did. I had successfully navigated 30 days of market chaos, survived drawdowns, and exploited opportunities I did not even know existed. In the final hours, it made a series of lightning-fast trades on a crypto ETF that pushed the profit over the $2,500 mark exactly. It felt like the machine was showing off, it had hit the goal with mathematical perfection. I watched the final trade close, a tiny scalp on a volatile tech stock, and the BUT went into dormant mode, waiting for new instructions. The silence of the screen was deafening. I had just made more money in a month than many people do in a year of savings, and I had done it while eating pizza and watching movies. The grind mentality felt suddenly very old-fashioned. Why work for money when you can program money to work for you? The milestone was not just about the cash, it was about the realization that the barrier to entry for high-level wealth has been completely dismantled by artificial intelligence. So, what is the catch? Is this a get-rich-quick button that everyone should press? The answer is more complicated than the profit margin suggests. While I walked away with $2,500 in pure profit, this experiment showed me that the risk is absolute. If the eye had encountered a black swan event, a type of market crash it had not been trained on, it could have hit zero just as fast. The reason I succeeded was because I had the discipline to stay out of the way. Most people will try this, see a small loss, and override the system, causing it to fail. To win in the age of I, you need to trust the math more than your eyes. I am keeping the profits, but I am also keeping the lesson. The 2026 economy belongs to those who can partner with machines, not those who try to outrun them. If you are still saving your money in a traditional bank account at 1% interest, you are not being safe, you are falling behind at record speed. The future of wealth is not about working harder, it is about leveraging the smartest intelligence on the planet. However, you must also be aware of the black box problem. I do not fully understand how the bot made that $2,500. If it had lost that amount, I would not have understood that either. This is the trade-off, you exchange control for performance. For me, the 250% return was worth the loss of control. For others, the stress of not knowing might be too much. I am leaving the I running for another month with a larger principle. The experiment proved that the machine is ready, but the real question is, are you ready to let go? The era of the human trader is over, the era of the financial architect has begun. Welcome to the future of money.